Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Friday, July 17th. It's been a great week. We had our 1-year anniversary party. We had our UBS shoot. We are back in our New York studio next week. But today on the show, Moonshot AI and Kimi K3 is getting a lot of attention as it challenges closed source models. We'll bring on the CEO of benchmarking company Arena for the latest on what he's seeing. We'll then unpack Netflix's latest quarter and separately some other big headlines from the week on this week's edition of The Editor's Cut. We'll dive into our latest exclusive reporting on the traction that Google is getting with its TPUs, and we'll close out the show with a conversation with the CEO of Beehiiv as they make a big bet on social. It's going to be a great show, so let's get right on into it. Kimi K3 is the big news of the last 24 hours. Moonshot AI released the model. People are suggesting it could be a big threat to existing models' dominance and an open source threat at that. I want to bring on Anastasios Angelopoulos, the CEO and co-founder of Arena, for all of his thoughts. Anastasios, welcome back to the show. It's great to have you here.
Thanks for having me.
New day, new model.
New day, new model.
You've been busy, man. I mean, gosh, this is like the fastest pace of model releases I think we've seen in a while.
It's incredible. 6 models in the last 7 days. It's been Grok 4.5, Kimi K3. Previously we had GLM 5.2. It's the new series of models, the GPT 5.6s, the Sol, the Luna, the Terra. It's been an extraordinary piece of model development, and it's left us with a Chinese open source model on the top of the code arena.
And did it come out of nowhere here? I mean, were we expecting? We'll talk about the reviews in a second. Were we expecting this to be this good initially upon reviews?
Well, there have been murmurs of the great performance of Kimi K3 for quite a while. But I'm not sure that people expected it necessarily from Moonshot. I will tell you what has been the trend, which is that over the past year, you've seen open source and closed source models had a big gap, and then it started closing and closing and closing. And then they were kind of tracking with open source models just a few months or weeks behind closed source models. And people were saying they're never going to crack it. And it's because of distillation. They're just distilling. And so fundamentally, when you distill a model, it degrades, and so you're never going to get better performance. But this is the first time we're really seeing the narrative that breaks that mental model, that says that the Chinese labs might actually just be really good at developing models and not just distilling American intelligence.
Right. So you run one of the most popular platform of benchmarks that is widely cited in AI. What is your data telling you about how good Kimi K3 is?
Well, the way our platform works is that we have a user base of tens of millions of people that are coming on Arena to use AI for their real workflows. They're agentic workflows. They could do single-threaded conversations that are, tens or hundreds of turns long. They're getting to do, workflow automation. They're doing coding. They're doing math. They're doing all these sort of economically valuable tasks. And we take all those tasks and then turn them into a benchmark. And one of the benchmarks that we released for Kimi K3 has been Code Arena, and specifically Kimi K3 is at the top. It's number 1 in front-end code arena. So it's the best at the sort of lovable vibe coding use case. Now the best model in the world for that, of course, to which hundreds of millions of dollars in inference spend will accrue is Kimi K3.
Ahead of 5.6, ahead of Fable too?
Ahead of Fable, which is absolutely remarkable.
So let's just pause here for a second. This is kind of, Fable was the model that really caused a bit of a reckoning in terms of cost. This is an open source model, which that means it's significantly cheaper, right? Am I correct there?
That's correct. And I will tell you, the gap between Kimi K3 and Fable is not small. It's a win rate of in the order of tens of percent. Let's say 10% is the difference in win rate between Kimi K3 and Fable 5, which is, it's not the largest gap that we've seen on Arena, but it is substantial and indicates a real delta in the change in performance. And now that comes at the cost of a model that is a sonnet level cost. That's a double-edged sword.
What do you mean by that? A sonnet level cost? What do you mean by that?
Oh, like Claude Sonnet. It costs the same amount of Claude Sonnet. It's $3 input, $15 output token. Same price as Claude Sonnet. So the significance of this is actually quite interesting. First of all, of course, the raw performance is amazing, but also the fact that it's no longer the case that open source model is, you know, 50% of the quality at 10% of the cost. It's actually that it's frontier level performance at a reasonable cost that you would see for a mid-tier frontier model. And so I think the ecosystem is evolving perhaps in an unexpected way in the sense that open source is actually also quite expensive, which speaks to the fact that the margins are actually not that high on inference.
Right. So that was coding. I mean, just give us a brief overview here. Other benchmarks. What other benchmarks does Kimi K3 really excel at, based on what you're seeing?
Well, it does sort of like it's definitely a frontier model on a lot of the static benchmarks. So if you're looking at things like SWE-bench and Tau and so on and so forth, it's sort of in the pack along with Sol and with Fable, although not necessarily leading on some, not leading on others, but still right there in the competition. Uh, in text arena, which is our benchmark for sort of chat GPT like capabilities with user interaction and so on, Kimi K3 is top 10, but not top one. And in
Hmm.
fact, it's not even the top model outside of OpenAI Anthropic. It's about tied with Sol, but
Okay.
it is beaten by MuseSpark 1.1 and the basically entire bench of Claude models, 4.6, 4.7, 4.6 thinking, 4.7 thinking, and Fable, all better um, chat models for chat interfaces.
So right
Uh,
now is for text, is who's at the top right now? That
right now, it's Fable. It's Fable
Fable. Okay.
5. Yeah,
So
on
so so
text.
so Kimi K3, from what I'm hearing from you, I mean, really, I mean, it's coding that has really
Yes.
impressed me. Of all the use cases you could use this for, that is the one that's standing out. Um, Let me ask you this: are there caveats to this at all? I mean, being a benchmark is certainly one way of measuring performance. Are there other considerations, though, around the way the model is made? How easy it is to use, that sort of might tell us something about how it's actually adopted by businesses?
We have yet to see how it's gonna be adopted by businesses. It's too early to say, but we're gonna have more to say on that over the next days and weeks about how steerable the model is and how companies are finding it easier and easier to use. Of course, the one thing that I will say is Kimi is quite a large model. And
Hmm.
so it's not like you're gonna be able to run this locally on your laptop. You are going to need a cluster. It's going to need quite a bit of infrastructure. And I would expect that many businesses will be relying on third-party inference providers to give them the compute they need even to do the inference on this model.
Let me ask you about the comparison. I mean, look, DeepSeek came out. This was a model that was not developed in the United States, obviously. It caused big market swings. People sort of asked the question, hey, do I need all the compute that I initially thought? I mean, do you see any similarities with this model and the impact that DeepSeek had on the ecosystem? Are they two separate stories? What do you think?
Well, I think it will cause a reckoning in the capital markets. And the reason for that is that it brings into question what the dominance will be of the closed source models. In a world where there's a narrative violation against the distillation story, then what will happen is that people will say, well, open source models coming from China, they have so many benefits. Businesses can incorporate them into their own infrastructure without relying on a third party service, without worrying about privacy and data leakage, without worrying about, you know, uh, evil third party companies training on their data and stealing their businesses. There's so many reasons why people would want an open weight model. And in a world where that can be done for free, then the question comes, why would we be paying for closed source models that are worse for our businesses, that are less private, and that allow these companies that want to be in every single business in, like FDE for every single vertical? Why would we be allowing them to witness our business and see our data, learn from it so that they can improve and eventually one day steal our business? Why would we do that? And so then what's likely to happen is an accrual of value to these open weight models from which, of course, the revenue model is quite different, and worse than the closed source models, which could then cause a collapse, in the way that people are seeing the compute markets because, of course, the compute markets are driven by the optimism and the revenue of the closed source models, so on and so forth. So it could cause a cascading effect.
Does it matter that it wasn't developed in the United States?
Absolutely. It absolutely matters. And in fact, we should all, from if we're patriots and Americans, be rooting for some American open source models to come out as well. Of course, it's fantastic that we see the Chinese developing these models and it's socially positive net net. But at the end of the day, because of the geopolitical risk, we are not going to see businesses comfortable building their entire stack on Chinese models.
Do you think that I hear you, and that is certainly something we hear from companies as well. Do you think that that is becoming less of an issue though? Because if I think of the last 2
No,
years, if I think about
no.
just
Absolutely not.
perception-wise. Okay.
Why do you think it's less of an issue?
No, no, well, I'm asking based on, um this is purely based on, narrative observation. What I feel like people are more willing to use models not developed in the United States. That's just based on
Well, I
conversations we've
think
been having on the show.
the governments of both sides would disagree. What I see happening is actually more hawkishness on
Mm,
both sides. That the Chinese government is actually talking about export controlling Chinese models.
right.
And the US government is also talking about banning Chinese models because neither side wants to incur the geopolitical risk. And of course, there's so much competition happening between the US and China. It is absolutely becoming higher and higher risk. We even have the US government banning US models from release, let alone Chinese models. I think it is
Right,
actually a huge topic.
right. Let me ask you about another model, Anastasio. So, Thinking Machines Lab came out with their model Inkling. What's been the reviews that you've been seeing on that particular model?
Listen, Inkling is the first open source model to be released by Thinking. Actually, the first model period to be released by Thinking. And of course, it's incredible to see that we have a company that is leading the American open source charge. The other contenders would be Nemotron, RC, Reflection, Mistral, of course, in Europe. And there's a couple other players. But Inkling came out at the top of the US open source race today. That said, it is not yet a frontier model by any stretch. It is, if you look at the wider field of top 10, including Chinese models, it is number 10. Number 10. So there's 9 Chinese models above this. And so they have quite a bit of room to climb. Now, if you know anything about thinking machines, and it's sort of, common knowledge, it's not something that I know specifically because of our business, but they've had quite a bit of restructuring, so on and so forth, people leaving, people coming in, restructuring their team. And so maybe to some extent it's impressive that they were able to do this in a relatively short amount of time since the current structure that they've had, 6 months or so. That said, there is a long, long way to go. And if you look at the field of closed source models as well as open source models, it is number 37 model. So we still have, there's a ladder to climb, but let's all root for them because we need a model within our shores to support the enterprises that want to avoid the geopolitical risk that we just discussed. If we don't have an American open source model, um, businesses will simply uh, be incurring greater risk and be less comfortable adopting AI.
Is there anything about the AI ecosystem in China that has, uh, made them so effective at developing open source models specifically? It feels like in the open source race, I mean, it's always been a question of which models are coming out of China. Why do you think they have always succeeded in that particular arena? No pun intended.
Yeah, well, I think that the strategy is actually quite a good one, which is to diffuse the model everywhere and then become the best place for running that model and therefore gain resources. And, they need to have some kind of an asymmetric advantage, the Chinese model providers, over the US model providers. There and but they because they have a lot of drawbacks too. So they are absolutely limited by the amount of GPUs that they have. They're absolutely limited by the fact that there's legal regulations inside the U.S. that keep you from shipping data to China.
Right.
And so, because of these facts, They need to have some way of attacking the market, and it may as well be open source. I think that's also compounded by the fact that there's a lot of central planning in China, and IP is treated differently in China than it is in the US. And perhaps there's less of a focus of IP from what I know of the Chinese market than the US market. So those are all reasons why the open source strategy would be better for them. And then how do you monetize? Well, there's two ways of monetizing an open source model. The first is become the best place to run that open source model. And then you can earn money through inference. That's what a lot of these companies are doing. And the second is through licensing. So you say, okay, I'm not going to run my open source model, but I'm going to partner with inference providers in the US that are going to run this open source model. And if they reach a revenue of above X dollars in running my model, then I'm going to do a rev share with them. And that's going to be in the licensing of the weights. And of course, because we respect licensing laws here, that is exactly what those companies are doing. And that's going to accrue back to revenue for those companies.
I want to ask you where we started the conversation. We talked about the pace of the release of models lately. It feels like they've been coming fast and furious. And we've been talking on the show about where AI research is at, the idea that continual learning is very much something that people are looking forward to. Why do you think models have been getting released so quickly? And let's put competition aside. I mean, there is a lot of incentive for these companies to put things out to continue to stay competitive. But is there anything about the current state of what these models can do, whether or not they can help develop other models, that is sort of uh, influencing the pace of the release of these new products?
Of course, I think you're getting at the concept of recursive
Recursive
self-improvement, the
self-improvement.
idea
Maybe
that
I should just say the
the
word.
models might be able to train themselves and so on and so forth. I don't think we're quite there yet,
Right.
although we are even seeing in our business that that the existence of AI is actually making our employees more and more productive by the month. We're seeing productivity per employee actually rise, even at Arena at our small scale. We're 70 people, and we are still seeing that effect happening. So I'm sure it's happening at the big labs as well. That said, I will say there's a funny dynamic. First of all, even competition aside with these labs, which is that the release cycles tend to be kind of bulky in the sense that you'll get a quiet week with a couple models here and there, and then you'll get a week with 10 models. And why is that? I think these companies are all hearing about each other. Oh, Kimi K3 is going to release the following day. Oh, we know that we're not quite as good as Kimi K3, so we should probably front run them so that we get a little bit of good press. Imagine if Inkling and Kimi K3 switch, right? If they switch on the release date and
Yeah.
Kimi K3 comes first.
Inkling doesn't. They don't release. They're not. They're not coming out with it.
Yeah, exactly. They don't look quite as good. And so it creates this dynamic of a mad rush. Everyone hears that everyone else is releasing. And so everyone is competing to be first, especially the players that know that they're on a weak foot. And not to say that Thinking Machines is. I think that the model is great. It's the number one US open source model. And again, we should all be rooting for that. But it's also true of the closed source model providers as well.
Right. So last question for you, Anastasia, is what does Kimi K3, I mean, what does it mean for the businesses of Anthropic and OpenAI as you see it?
Well, I said this online and I'll say it again. I think we're going to see a lot of companies that are distilling, American companies distilling Chinese models now instead of the other way around. I'm sure OpenAI and Anthropic have their own way of training models, but even beyond those two, uh, the Kimi K3 is going to serve as a base model for many, many US models. And we're going to see that happening now. And if the trend continues that the Chinese models get better and better over time, it may pose like a serious threat to the closed source business model because of all the drawbacks that the closed source providers have.
Hey, are you expecting a comeback for Google here? They've kind of fallen off the map here with the model
Absolutely. I
landscape.
actually have huge belief in the Google team. You should see those people. They're really smart. Their team is like excellent, excellent. I mean, it's also true of
Everyone's
Anthropic and
smart.
OpenAI.
I mean, I just
Yeah.
wondered if the
No, I think they're good. I expect to come back. Wait for it. Just wait for Gemini 4. I'll bet you it'll be,
we can't.
at
Well,
the
hold on. We
top.
can't even get 3.5 is delayed now according to Bloomberg. So we got to get there first.
Yeah, that's right. That's right.
All right. Well, Anastasios, I want to thank you for coming on. That is Anastasios Angelopoulos, the co-founder and CEO of Arena here on TI TV. Netflix reported results last night. Investors were not pleased with their reaction today. The stock is down 40% over the past year. It fell considerably today after the results. To discuss that and other big headlines from the week, I want to bring on co-executive editor Martin Peers for this week's edition of The Editor's Cut. Martin, welcome back to the show. It's great to have you here.
Hey, Akash, how are you?
I'm good. I'm in San Francisco. I'm not
I
in New
know
York.
you have not been here all week.
I know. Did you
Been
miss
very,
me? Are you?
very
I'll be
quiet
back.
in the office. Very quiet. We're able to get work done.
Okay, well, I'll be back Monday. So, sorry. Um, okay, so Netflix reported results last night. What were the highlights?
Well, the highlights were kind of what we expected, which is that every quarter this year, their growth is slowing. It fell to, I think, 13.4%. It's really come down by 3 or 4 points over the last few quarters, and they are projecting it will continue to slow. This is not a surprise. I mean, this company is now very large. At the end of last year, it had 325 million global subscribers. They are making more money than anyone else. They said that this year they would have $12.5 billion in free cash flow, which is more than Disney. So they're really a giant company. What is interesting about Netflix now is that television used to be a hit-driven business, and the networks, in the old days, their advertising revenues would reflect the nature of their hits and their popularity. So how many people were watching a BC would influence the advertising it got in the year after, so if it had the number one lineup, in one year, then it would go into the upfront very, very strongly. But we're in a very different environment now. Netflix, it needs hits, but not in the same way as the networks needed to. It just needs to make sure that people continue to subscribe. And because they have such a vast array of programs, they're really able to keep people subscribing. The issue now is, can they maintain growth that investors have come to expect? I mean, I think over time, that's just not gonna happen because, it's very hard. I mean, they've probably got pretty much everyone that they can get. There are a few.
Right.
Then the interesting issue they have, which they highlighted, uh, yesterday, was that one way they can get more revenue is through advertising, which is still a very small part of the business for them. And for that to grow, they need to have more live programming, particularly in sports. And they made the point that they're gonna spend, I think, 5% of their programming on live, but that will only account for 1% of the actual programming. But that
Right.
brings in new, subscribers. So it's an issue. Sports is extremely expensive. The TV people cannot make money on sports really, but they need it to maintain an audience. The more Netflix moves into that area, the more their enormous, profits will get diluted. So, you know, I'm
So
not
it's a
sure.
it's a classic growth versus profitability
Yeah.
trade-off here, basically, that the company's gonna have to grapple
And then
with.
the other issue is, when we've already seen this happen, they have to resist the temptation to do some big acquisition to, as a way of trying to find
Growing.
a way to grow. They obviously fell prey to that when they did the deal to buy Warner Brothers Discovery. Fortunately, they got overbid by David Ellison, and now they're insisting again, we have a very high bar for M&A. Well, okay. Hopefully, they will
An
maintain.
eight what is it? 80 billion-dollar bar? It's like we won't go above 80 maybe or something like that.
Exactly. And, yeah, the stock is down a lot, but really, if you look at the multiples, and where it has traded in the past, it's still actually a fairly expensive stock for that industry. So, things are not as bad as some people might make them out to be.
So, I guess just thinking about the levers here that you think they could pull, I mean, there's subscriptions, there's advertising. I mean, they haven't yet done anything in the way of, like, free, free
There's some
platform?
speculation they could do some free stuff, which would maybe help on the advertising, but they made the point that they don't want to do anything that would, um, cannibalize the existing, subscription. So they can't put anything on the free that would prompt anyone to cut the cord and to cancel. And honestly, the free services that are out there mostly show crap. Um, and will draw a particular part of the audience that doesn't want to pay, and those are people that a few advertisers want to reach. It's not like that's nothing, but it's not a great part of the business. So I wouldn't overdo the idea that Netflix is going to go heavily into free stuff. I
Yeah.
think
Well, and this is I mean, if you think about now they're doing the podcast too. I mean, I you sort of think about the brand of content that you find on Netflix. I mean,
they're
on the
just putting
spectrum of
they're just putting more and more stuff on, and
yeah,
their aim is to be the place that you can find anything. There's always going to be something there for you, and I think they've done a pretty good job of that. So um, I think they're going to be hard to beat.
Let's go to a different story that also made news this week. We didn't cover it. Stripe reportedly is possibly considering a bid with a private equity company to acquire PayPal. It was the number that Reuters reported, $53 billion is what's being considered. You wrote about this in your column this week. What was your reaction to that?
Well, it's what Stripe and Advent, the private equity firm, are thinking about. It's not.
Right.
I mean, I saw a report this morning that PayPal's board thinks it's not high enough, which is kind of obvious because it is a very low bid. I mean, PayPal, that price I think is $60.50 a share, and the stock had fallen recently to in the 40s, but that's very low compared to where it has traded in the past few years. So Stripe and Advent are coming in when the stock is weak. PayPal appears to have been struggling. It's lost ground. It's facing Apple Pay and Google Pay and everybody else. It's barely growing. But look, this is a company that makes a lot of money, and it wouldn't be that difficult to revive it. They own Venmo, which is a very strong business, and I think people believe can be. And and sorry, the Venmo is growing, and people believe Venmo can make more money. So there's a lot of potential here. I think what's more likely to happen is that the PayPal board will open a process. They will invite people to make offers. They really have to do that now that somebody has made an offer. They can't just.
Who else do you think could make offers?
Well, look, it could be anyone. SpaceX is an obvious one because Elon was one of the original investors and executives of PayPal, and he has, for years, been talking about starting a payments app through X, which he's talking about doing this X money thing. So PayPal would fit. He could easily afford it if he issued stock. And the cash that he got, if he bought it, would help pay for some of the AI investments that he's making. So I think that's one seems to be obvious possibility. There's other possible bidders could include the banks, maybe. I'm not an expert in that area, but I would guess that there would be quite a few people lining up to make an offer.
Right.
That if that happens.
Well, we will have to see how it all shakes out. Martin, I want to thank you for coming on. That is Martin Peers, our co-executive editor here at The Information. Google is ramping up its competition with Nvidia on the chip front, and it too is getting creative with the deals it is striking to get chips in customers' hands. Amir Afradi is our other co-executive editor, he published some exclusive reporting about that effort in our AI infrastructure newsletter. I want to bring on Amir to share more about what he knows. Amir, welcome back to the show. It's great to have you here.
Good morning.
Okay, so let's talk about this meaty newsletter that you had in our AI infrastructure column this week. There was a lot to it, and I want to see how much we can get through. Who is Google targeting with their TPUs right now, as far as you're hearing?
Yeah, so the tensor processing unit effort, as you probably know, is a very long-term journey for Google, which was one of the first NVIDIA chip users for AI. I found out about NVIDIA only because I was covering Google. And fairly early on, they made this investment to make their own chip that was more tailored to their machine learning models. That has turned out to be quite a smart move, not only for Google's like internal margins because it runs a lot of its search and other AI workloads and advertising on TPUs. Now it sees an opportunity in this moment with AI to actually capture a significant portion of the AI chip market. So as part of that is trying to figure out how to scale up this business, but do it in balance with the fact that Google is also one of the biggest still buyers of Nvidia chips. And that's because it has its own cloud business for all kinds of other companies that want to use those chips for AI workloads. It's trying to get some of those customers to use TPUs in addition to GPUs. So it's a very, very complicated balancing act.
And so who specifically has Google been targeting lately? You had some reporting on this.
Yeah, so there's this whole array of neo clouds, as you know, these very kind of GPU specific cloud providers, and they exist only because NVIDIA allows them to exist. These are companies, many of them are former cryptocurrency mining firms that have pivoted their business to just servicing other companies that want GPUs. So these companies were using GPUs for cryptocurrency mining. Now these GPUs are used for everything else. So they have some experience in running data centers. There's a whole group of, there's probably hundreds of them. There are only like half a dozen that actually matter. And Google has been talking to those companies for a while about whether they'd be interested in bringing on TPUs, which, I should mention that, we're in this huge CapEx boom as well among the biggest cloud providers in particular. And Wall Street is going to be scrutinizing CapEx more and more and more and more. So for a company like Google, which is again one of the biggest kind of CapEx spenders as it develops its own data centers increasingly, working with these other companies, these neo clouds, is a way to kind of lower a little bit that capex, get somebody else to take on data center development, in particular with TPUs, which increases Google's operating expenses, but the benefit is it could decrease its capex expenditures. So anyway, Google's approaching these companies and saying, "Hey, you should work with us as well. It's nice to, not be completely dependent on Nvidia."
Yeah.
Jensen Huang, as you may or may not know, is a fairly competitive person. There's a reason Nvidia is the world's number one most valuable company.
But I
He's
mean,
not.
what is the what's the pitch? I mean, take us inside the pitch from Google. What are they saying? Is it cheaper?
Yeah.
Is it just diversity of chip that is the root of their argument? Like, what's the pitch they're making?
Yeah, a few things. So, look, NVIDIA is the gold standard and does not seem to be, near to losing that title. But Google says that it has a few different advantages for companies that want to use TPUs specifically for, transformer-based AI models. These are chips that have not changed as much as NVIDIA's chips have in terms of the design and the kind of networking and other hardware that you need around it. So if you're a company that is installing them in data centers, you may just have fewer surprises. Whereas with each new NVIDIA generation, you're dealing with a whole host of radical changes, which is part of what makes NVIDIA great, but also is incredibly painful for the companies, including these neo clouds that want to install them, as well as the traditional cloud providers that also are installing them. So Google is saying we have a lot more consistency here, and these chips are Google, according to Google, much more efficient in some ways compared to GPUs for running AI models. Some of this has yet to play out, but I think there is something to that. And if there's one single competitor that Jensen is paying close attention to, it's Google and TPUs.
Now, you had some reporting that Nscale is a neo cloud that Google has been talking closely with. Do they have a deal in place, or what's the status of that negotiation?
Yeah, there's no deal that we know of, and one of the things that happens is Jensen has intel across the industry. He generally, not always, generally knows who's talking to whom. And in this case, he did find out that Google was talking to Nscale, and there's some moves that happened since then that made some folks around this feel like he was providing additional incentives to Nscale to maybe get them to not use TPUs. Nscale says on the record that's not officially their perspective here. But yeah, Jensen's not silly, and he has not been shy at all to use his company's balance sheet to help his biggest customers. And now Google's really targeting some of its biggest and most loyal customers. It's just extremely nerve wracking for someone like Jensen.
Although another thing you point out in the newsletter, though, is that while Nvidia is throwing its own balance sheet at the problem here of getting people to adopt their chips, that is also possibly an approach now that Google themselves is considering. No.
Yeah, yeah, absolutely. This is another reason why Jensen cares about Google, probably more than any other company. Google has lots of cash. It generates lots of cash all the time, just like Nvidia does. So if anyone is in a position to really seed the market with competing chips, it's Google. So it has been discussing these kind of backstop deals where it will essentially be guaranteeing to lenders who are going to lend to different businesses that may want to buy TPUs, that Google will pay out if those companies that are borrowing for TPUs can't find buyers or renters or what have you for these data center chips. And so those conversations are happening now. Important to point out that Google also has a joint venture with Blackstone to essentially develop a TPU cloud provider. This is kind of another leg in this stool of getting TPUs to be used externally outside of Google.
And I guess from Google's end, I mean the for Google to backstop these TPUs, I mean for them, I guess the argument is, hey, we can just use them ourselves for our own cloud offering, right? So I mean, it's really no, we're not losing anything because we can just use the chips ourselves, basically. So and that's something that Nvidia, I mean, they don't really have as big a cloud business, obviously. So that you could argue is a leg up in I guess the landscape of backstops. Amir, I think this it really comes back down to Nvidia's dominance, but when Jensen is going around and trying to convince its customers not to use TPUs, do you think that there's any part of him that is nervous that Google itself is a big customer of Nvidia? I mean, I guess they need GPUs at the end of the day, but I just wonder how much you think that complicates the calculus here of these discussions.
Yeah, I mean, look, for the moment, it's very much the case that Google needs Nvidia, um, you know, just as much, if not probably more, than Nvidia needs Google. There is plenty of demand for GPUs. If Google were not buying GPUs, Nvidia would probably be able to find other cloud providers and AI developers to buy them. But Google's been a really, really, really good customer for Nvidia. It's been a critical customer for Nvidia for so long. And like I said before, really using Nvidia chips longer than anyone has for AI in particular. So I think we started this conversation talking about a balancing act, and it really is that. Like, neither of these companies want to break off the relationship, but Jensen has a lot of these other considerations because he knows Google is actually the only, the only true threat to his dominance because of all the work they put in.
And on the backstop deals that the neoclouds are getting from the chip companies, is that something that the neoclouds, that they are insistent on having in place? And the reason I'm asking that is because, I mean, the neoclouds, I guess, if there was any question about demand, right? I mean, that's where the backstop comes in handy. Right now, we are in this environment where everyone insists, there is excess demand, right? And so I guess I just wonder how the extent to which the neoclouds really need these backstops. Is it really just an emergency, or is it something that you think could actually get used, in the near future.
So backstops are going to be important. I mean, it's not just the neoclouds. You have AI developers like OpenAI and Anthropic and XAI. These are companies that want to develop their own facilities. With companies like Anthropic and OpenAI, they don't have the kind of credit ratings and track record to be able to borrow a lot of money. Tens of billions, hundreds of billions. They need partners for that, and so that's where these backstops come in. So whether it's Nvidia saying, we are going to make guarantees for a gigawatt data center in Ohio for OpenAI, or Google making a similar guarantee for Anthropic, which is a huge TPU user, and probably Google's best external TPU customer. Those are pretty critical things to have. Like lenders are not going to give great terms if they don't have these guarantees.
In other words, this is not a reflection of demand at all. This is just a reflection of financing, essentially.
Yeah, it's just risk.
Right.
I mean, these facilities cost a whole hell of a lot of money. $50 billion for a gigawatt data center, all in, maybe 60 billion. And rising every day. And as you saw with the kind of Kimi earthquake overnight, things in AI change quite rapidly, and so the risk tolerance here is a tricky thing, and that's why when you have companies with strong balance sheets, they are going to be needed increasingly for really, really big infrastructure deals.
Right. Before we let you go, there was another part of your newsletter that really caught my attention. And I should say there's a lot in there, so I encourage everyone to read it. You also had some reporting on the extent to which Google has been able to get capacity at TSMC and what that story looks like. What's the latest there?
Yeah, and I should mention Kathy Perloff and Phoebe Liu were my partners in crime for this piece. So TSMC is really the key bottleneck here for everyone. So anyone who wants to make a chip, they have to go through TSMC first. Google actually works through Broadcom to get capacity at TSMC for its TPUs. And right now the allocations for 2027 are beginning, and we'll find out more fairly soon where Google has kind of shaken out in terms of getting the capacity that it wants for its TPUs. Nobody's ever really happy. Everyone wants more, and TSMC has its own very, very difficult balancing act with all of its customers, including Nvidia, which is really its key customer, to figure out how much capacity it's going to give Nvidia and how much capacity it's going to give Broadcom and all the other competitors that are trying to kind of take market share from Nvidia. And so we don't know yet exactly where that's going to be. It's always going to be a trouble spot because Google has all these internal needs for TPUs. As you pointed out, it runs a lot of its business on TPUs at the same time that it wants to create an external TPU business for Anthropic and Apple and other users. And Meta is actually becoming a big customer of TPUs as well. So I think we don't yet have clarity as to what TSMC's perspective is on this and how much it wants TPUs to be a really big thing. But they're growing, and I would definitely not sleep on this if I were Jensen, and I don't think he is.
I don't think Jensen is sleeping a lot as it is anyway. He seems like he's a busy guy. So, Amir, I want to thank you for coming on. That is Amir Afradi, our co-executive editor here at The Information. Okay, to close out the show, I want to take a trip over to the creator economy. Beehiiv made a product announcement this week, launching a tool for newsletter subscribers to connect with one another. The company is quickly becoming a force to contend with in the era of new media. I want to bring on CEO Tyler Denk for an update on his business. Tyler, welcome back to the show. It's great to have you here.
Yeah, thanks for having me. What's up?
I'm not much. How about you?
Busy as always, but
Busy as
yeah,
always.
we're very excited about the recent launches.
You might be the only person, Tyler, to wear a tank top in a keynote for a product release. Is that it?
So I actually wasn't wearing a tank top for the actual product release. That was a little bit of a behind the scenes
Okay.
photo. Yeah.
Okay. No. But you were wearing a tank top with the shirt open, right?
It's true. That's true. It's very
that's true,
valid. Very
right?
valid.
Okay. So look, you're the fashion guy. Okay. I'm I'm looking to you for notes, although I will not be wearing a tank top on this show, to say the least. Tyler, are you launching a social network? Walk me through the vision here for this product release.
Yeah, so quite the opposite, actually. I think that right now social networks are all about algorithmically driven content. And as we've seen with the addition of TikTok and Instagram Reels, a lot of content creators who had built up these large audiences are no longer reaching their audiences reliably. It's kind of two sides of the same coin. It's democratized small content creators to put out good content, and the algorithm can take it and proliferate that across the network, but it's also taken away from a lot of these content creators who have built really large audiences and can't reliably reach those people. And so I think that is why newsletters are so powerful. The owned audience and distribution is really valuable in this new ecosystem, to know that when I send my newsletter every Tuesday to 130,000 people, 130,000 people receive that newsletter.
Right.
And so what we launched yesterday was community features. And the way that we view community, I'll just keep using my newsletter as an example. I have 130,000 founders and startup employees. I have interacted right now. I provide value by creating content weekly and sending that newsletter. I have met a lot of my readers. They're very ambitious founders. They would benefit from getting to know each other and provide value, not just from me, but from sharing hiring practices and fundraising and introductions. And so I think the next evolution of the creator economy, especially in a time with AI, is more focused towards human to human connection. And as our roadmap reflects, we started with newsletters, and then we launched websites. Then we launched digital products, and a few months ago, we introduced podcasts. I think
Right.
the most successful content creators today are multi-channel and can engage with their audience in multiple different ways. And our roadmap would reflect that. And we want to become the platform where any content creator can build and power their entire content business in a single consolidated place.
So you got this new suite of tools where basically newsletter subscribers, I mean, they can chat with one another, they can interact with one another, from what I understand, right? I mean, the question I have is, why wouldn't they just go set up like a Discord or something like that?
I mean, Discord is like one of the companies that you could say that we'd be competing with for this.
Yeah.
Right now, we
So
do
why do you
have.
think you would do it better, the Discord?
Yeah, well, Discord as an example is like primarily built for gaming, and the way that they do threading and communication is like very different from, I think, what a content-led business would be used for. To be fair, we have a Discord integration. You can integrate. We have some users who integrate with Discord, but the thing is, I think there's a lot of value in consolidation and knowing that who your audience is more important now, more now than ever. And being able to send a newsletter and know who's opening and clicking on your different links in your newsletter, who's also listening to your podcast, who's visiting your website, who's purchasing your products, and who's the most engaged member of your community. Like historically, all of those have lived in different silos. And most content creators don't want to create a data lake and stitch together 5 or 6 different platforms and have like
Right.
a
And because there's the whole convert. I mean, how many of your subscribers convert to Discord
right.
participants,
And how can we
etc.?
make that easier? So today, like
Yeah.
you can send a newsletter, and if you already have if you launch a community on Beehiiv, with one click, they can join this community from your
Yeah.
newsletter. There's
Yeah.
also like right now, a lot of these businesses and creators are launching subscriptions. And so obviously Substack came to the market with like a very heavy subscription product, and paid subscriptions were the way that content creators were making money on that platform. We have the same capabilities. We don't take a 10% cut of revenue, but now that same subscription can apply to paid newsletters in addition to access to this community. And so having one unified subscription where a reader or someone in your audience can pay a single fee and they get access to not only your community, not only your paid newsletter content, but also your paid podcast that can be put behind the paywall. And we have an integration with Spotify there as well.
So
can kind of see-
you're keeping your it's a subscription business model, and I guess if you want to launch a community, I mean, is it all just one price for the subscription to Beehiiv? Is it a higher tier price to launch a community? How do you plan to make
Yeah.
money on this?
So for Beehiiv, no, this is available in all of our existing plans. We didn't roll out any price increases. We're not gating community on our highest plans. It's available on any paid plan.
Yeah.
So all of our users have access to community today. I was thinking through the subscription of, as a reader, as a member of the audience of one of these content creators, it is annoying to have a subscription to a paid newsletter, but then also pay separately for their podcast, and then maybe have a third subscription to that same content creator who has a community. where I see the benefits of having a community on Beehiiv and really our thesis around consolidation is I think as a content creator to offer a single $10 or $20 a month subscription that has
Right.
access to all of your premium content plus the community is much better than piecing together a Slack or a Discord where it's a disjointed experience for the reader, multiple different subscriptions. So yeah, it's really just like a convenience and
Yeah.
consolidation play.
I guess I mean, Tyler, just to go back to where we started, then I'm just sort of trying to understand the line here between a social network and then what you guys have launched here, because I'm imagining myself. So if I subscribe to 10 different newsletters, let's say they're all Beehiiv newsletters, right? I mean, I would then be participating in 10 different communities, let's say, you know, and chatting with a variety of different circle of people. Uh, it feels like a social network, no? I mean, like is that why is it
The
not?
difference is it's not a Beehiiv app and it's not a Beehiiv social network. For the example, again, going back to my newsletter, if and when I launch my community, which I will in the upcoming weeks, that is constrained to just my audience. And so it is my newsletter. It's a community for the founders and the startup employees that read my content and follow me
Right.
and want to interact with other people.
Is there
That
like
is
a for you page, like a news feed?
within my community, yes, but it doesn't go cross different communities, if that makes sense. So if you were to launch a community on Beehiiv, like
Right.
your audience can join, and there's no overlap between them and my community. And I think it goes back to like the Amazon versus Shopify analogy that we use a lot, where we want to be more like Shopify. We are tools and infrastructure in the background of these different creator businesses, and we want when you go to a different e-commerce website that's built on Shopify, you might have no idea that it's built on Shopify. And that's the point. They're tools and infrastructure. The same way that we want to empower content creators to build their business, their newsletter, their website, their podcast, and now their community. And they don't have to have any association with Beehiiv. It is the Cody Sanchez community. It's the Colin and Samir community. It is
So
their
you would
own
go
space.
to their website based. I mean, they've you know they not only launched their newsletter with Beehiiv, they've launched their website with Beehiiv. You know, they basically have their Beehiiv powered website essentially, and so I would go to that website. And that's where I would find the chat or the community. Essentially, there will never be a centralized, as you said,
Correct. We,
a,
we,
a
we are not
Beehiiv.
trying to be a social platform.
Right,
And
right,
that is, we are not building, I guess,
right,
to use Substack as an example, a Notes app. We're not building X. We're not building Blue Sky. We
right.
want to empower our users to build their own networks and their own communities where they can engage with their audience. And we are private labeled in the background tools and infrastructure to support that. I think the sovereign content creator that is not overly dependent on algorithms and can reliably reach their audience and engage them deeply, whether that's through newsletter, podcast, or community, are the ones that are going to be the most successful moving forward in the creator economy. And
Right.
we want to be the tools and infrastructure to support that.
I want to ask you about another suite of products that you introduced. So you introduced a number of AI-powered products for creators to make themselves more productive with your tools. Let's go straight to the question of what models you're using, given that models are very top of mind today and always. Are you using open source models in the back end? Are you using closed source models? What are you using?
Yeah, it's a great question. We are multi-model, I think mostly closed source today.
Okay.
Right now, we are focused on providing the best experience possible. Is there a time where open source becomes more economical? But I mean, the time for that's probably now. But
Yeah.
we'd
I
rather
was gonna say, I
prioritize
mean,
being
you know, we saw it. I mean, Kimi K3, it's you know moving. I don't know if it's moving markets, but it's certainly moving news feeds right now.
Yeah, I think it's definitely on the adoption curve. It's like we want to provide the cutting edge of what we can on adoption. Once adoption's there, then it goes down to how do we become more economically stable and leverage all of the open source models so it's more sustainable for us. And it looks like that is approaching pretty quickly. But yeah, we're multi-model. We use different models for image generation, different models for text, different models for automations. The way that we view AI is we don't think that, and we're not trying to replace the content creator. I think there are a lot of content creators, and I always use this example that I was on this panel, and the lady next to me said she spends 5 days focusing on everything around her content, doing admin work, and 2 days creating content. And I think as a content creator, it should be the opposite. You should spend most of your time doing what you love and creating content, and you should be able to augment all of that admin work. And I think AI is the perfect use case to do it. So our MCP that we launched a few months ago is one of our highest NPS products that we've ever launched. It's automated a lot of this admin work from a lot of our power users. And then yesterday we introduced this AI Copilot, which basically just takes the MCP, brings it into the platform. It's fully aware of what you're looking at, what you're doing, and can augment and build different automations and segments. A lot of the things that content creators don't feel like doing, but they have to grow their business. I think that's where we see success and where AI kind of fits into the broader picture.
How do you think about this issue? We've been talking on the show about trust in AI labs and closed source models, the idea that they might be using your data for their own benefit as well to train their models, et cetera, stuff like that. I mean, this is the argument everyone's making, is this is why you should look to open source. You as as a founder that has to rely a lot on these closed source models, is that a concern for you at all right now?
Not I have a lot of concerns as I build the
Yeah.
business, right? Like every day is just solving a new problem. This is not the highest of my concern. I think
Yeah.
there's more AI forward companies that are on the cutting edge, where whether it's website development or voice recognition, where sharing those trade secrets back to the closed source models, I think I would feel a bit more vulnerable. For our business, like I think it's a few deviations away from like a top priority of any of these AI labs. So it's not a massive concern of mine today. But yeah, I mean, both from a cost perspective and for that exact reason around trade secrets, I do see this shift towards open source models happening probably faster than we had expected over the next 6 to 12 months.
Great. Well, Tyler, I want to thank you for coming on. That is Tyler Denk, the CEO of Beehiiv here on TI TV. That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. If you can't make it then, episodes are available on theinformation.com, on our YouTube channel, or wherever you get your podcasts. Make sure to follow us on social media, on X, on Instagram, on TikTok, and on LinkedIn. I'm already excited for our next show on Monday. We got another great week planned for you. Have a great rest of your Friday. Bye-bye for now.